In this video, we're going to talk about the advanced child tax credit phase-outs. Now, I've recently done a whole bunch of videos on the child tax credit, but in this video, I want to focus in on those phase-outs, look at a tax return, look at a W-2, but most importantly, show you some strategies on how you can maximize the amount of your child tax credit, both on a monthly basis and at the end of the year on your tax return. But before we get into it, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So the child tax credit recently changed where we're either getting $3,000 if your child is over the age of 6 and under the age of 18, or $3,600 if your child is under the age of 6. So it's one of these two numbers that you're going to apply for the child tax credit. Now, there are two phase outs. The first phase out is going to be for married filing jointly at $150,000. For head of household, it's going to be $112,500. And for everybody else, it's going to be $75,000. Now, that is for the first phase out. The second phase out is either at $400,000 for married filing jointly or $200,000 for everybody else. Now, what was really important is looking at your adjusted gross income, or your AGI. Now, as that number increases, that means your child tax credit is going to go down. Child tax credit. So what we want to do is flip over to a tax return so we can start to look at the numbers, and I'm going to show you exactly where you should look to make sure that you're reducing your adjusted gross income as much as possible and maximizing the amount of your child tax credit. So let's go ahead and go through a 1040, and I'm only going to highlight the most important parts to make sure that you're maximizing the child tax credit. We're not going to go through every single line, just what you should focus on so you can understand how the child tax credit works and to maximize the either $3,000 or the $3,600. So let's go ahead and pull it up on the screen. This is a 1040. This is from 2020, but the concepts are going to be the same. The numbers will change a little bit, but again, the concepts here are going to be the same. So on line 1, this is going to be your W-2. That is the number that you're going to put there. And we're going to show a pre-filled out 1040. I'm just showing you exactly what we're looking at today. So just stick with me. So line 1 is going to be your W-2. Then we're going to jump down to line 9. This is going to be your taxable income. And all these numbers are going to adjust your income. So that is what's going to end up on line 9. Where you can take action, I'm going to show you in a minute, is going to be line 1 and then on line 10A. Now 10A is going to be from Schedule 1, line 22. And if you're not familiar with any of this stuff, don't worry. I'm going to break it down and you're going to understand it by the end of this video. That's where we're going to take action. That is going to drop down to your adjusted gross income, and that is going to be right here on line 11. Now, this then gets subtracted by your standard deduction. So that is really important to understand because that ends with your taxable income. So that's where it goes to the federal tax brackets and how much you're actually going to pay. But for the child tax credit, the important number to adjust is the adjusted gross income. So let's go ahead and go back up to the top and start with line 1. So this is your W-2. What can you do to make sure that you're maximizing the amount that you can get on your child tax credit? So if we go ahead and look at a W-2, here we go, is a W-2 that I put together at $160,000. So at $160,000, in this one, it's completely fictitious. That's why I left off the federal income tax withholdings. We can see that the Social Security only goes up to $137,700. That is for 2020. That means you're only taxed on Social Security up to $137,700. And then our total Social Security taxes withheld. You can also see our Medicare wages withheld, what that is included, what that number calculates to. This is how much is withheld. So as far as the Medicare goes, it doesn't matter how much you earn. It all gets included in that calculation. Social Security only goes up to that amount. Now, we haven't done anything on this W-2 to reduce your adjusted gross income. So here is what we can do. We can put more money into our retirement plan, which will reduce our adjusted gross income, and also our taxable income too. So we're going to see that. So let's say that we earned $160,000. So we're already in that phase out, but we want to maximize it. So we want to get down to at least $150,000, at least for our adjusted gross income. So first, let's see how this plays out. We take this $160,000, which is in box 1. That's how much we're earning. And this is going to end up on line 1. Let me get this sheet behind it out of here so we can see it a little bit better. $160,000 on line 1. And then if we drop down, we can see we've done nothing so far. So our total income is going to be $160,000 and our adjusted gross income is going to be $160,000. And then for 2020, this is where I said the numbers will change for 2021. But for 2020, it was $24,800. Then we subtract that to get our taxable income. Now we haven't done anything at this point to maximize our child tax credit moving forward. That is what we want to focus on. So let's say that we went in and increased our contributions to a retirement plan. So this is what it would look like. So if we go back to the two W-2s, these W-2s, in the first example that I showed you, we're earning $160,000, haven't done anything to our retirement plans. So this is what we're left with. We're left with a total amount towards Social Security of $137,700, and the total amount that we'll have to pay for Social Security is $8,537. Medicare's at $160,000, and then we're withholding $2320. So let's take a look at that tax return really quickly. I know this is getting maybe a little confusing for you, but stick with me on it. So we're here. Our total amount that we're going to pay on our taxes is $21,324. That's at $160,000. Now let's say that we go back and increase the amount that we're putting towards our retirement plans by $10,000. So we're going from $150,000, putting it into the pre-tax retirement plan. That means our total income is now dropping to $150,000. So if that is the case, let's go ahead and bring up that return. So first, the W-2 is $150,000. Now we're not earning less in this example. We simply put $10,000 into a 401k, which reduces your taxable income. That means on line 1, it will actually show $150,000, not the full $160,000, because we took $10,000 and put it pre-tax into our retirement plan. So we've done two things. We've increased the amount of our child tax credit and we've reduced our taxable income. That means we're going to pay less in taxes in general and get a bigger tax credit, child tax credit. So if we bring up that return, this is what it's also going to look like. It's going to be $150,000 and we drop down. That means our adjusted gross income is $150,000. Therefore, we qualify for the maximum amount of the child tax credit, and it's also reducing our tax liability. So that's dropping down to $19,124. So originally, when we didn't do anything, earning $160,000, our tax liability was $21,324. Now, because we did that, we're going to get the full amount of the child tax credit, whether it's $3,000 or $3,600, and we're also going to pay less in total taxes, and it's going to drop to $19,124. Now, this is only the first way that you can maximize your child tax credit that we're going to talk about in this video. So that's putting money into your retirement plan. Let's say that you just don't have it in your finances, in your budget, to take the money and put it into your retirement plan. When you get the advance, go ahead and adjust your retirement plan and contributions, because then when it comes to the end of the year, you'll maximize the amount that you can get from the child tax credit. Because let's say that you earn too much, then you're going to have to pay it back. So you want to make sure that you're maximizing it. That's one way to do it. That is one way, because you're going to get this money in advance anyways, you can start to put it into your retirement plan, make that adjustment, because you have to do that before the end of the year, throughout the course of the year, into your retirement plan. Unless you're a small business owner, or this is going to be for strategy number 2. So if we go back to look at the tax return, what can we do? If we look at the original tax return that we were looking at over here with our highlights, we see that we have 10A from Schedule 1, line 22. That's going to show us a whole bunch of different avenues that we can use to reduce our adjusted gross income. So it's going to have the same effect as putting money into our retirement plan. But if you don't have a retirement plan at work, or you can't or don't want to contribute to your retirement plan at work for whatever reason, you want other avenues, here you go. So let's go ahead and pull that up on the screen. So this is going to be our Schedule 1. Now I've highlighted 3 areas that I think are pretty easy that you could take action on and put money into these areas. So the first one is going to be your HSA, if you have one. Now this is not the one through work. This is if you have your own health insurance plan, and it does have an HSA because that is pre-tax. That is one way you can reduce your adjusted gross income. Another way is if you're self-employed, if you have a side hustle. And I say that because a lot of people don't realize that if you have income coming from a side hustle, you are self-employed. You can open up a retirement plan and take this money and put it into that retirement plan. So here on line 15, we have the self-employed SEP. We have a simple and qualified plans. Qualified plans could be a solo 401k, which could be a great savings retirement plan that you can use for your side hustle to get a little bit more money, reduce that adjusted gross income, because it's going to end up on your tax return. So you want to make sure that you're saving as much as possible and paying the least amount in taxes. Now, the last one there is your IRA deduction. That is a traditional IRA, again, if you qualify. I've done videos on the traditional IRA, on the phase outs, so make sure you look at that video before you just open up a traditional IRA and start putting money into it. Now, on Schedule 1 alone, there were 3 ways that I just showed you that you can reduce your adjusted gross income, but in each one of those line items, there's a lot of different scenarios that you can go through to reduce your adjusted gross income. Again, maximizing your child tax credit and reducing your total tax liability. Now, all of the strategies that we talked about are going in pre-tax into these types of accounts, not the Roth side, not the Roth IRA or the Roth 401k side. Now, those are great retirement plans and those are great savings vehicles, but they do not reduce your adjusted gross income in the year of your contribution. So you want to take a little bit closer look at the pre-tax type of accounts if you're at or over those thresholds to maximize your child tax credit. If you have any questions on any of these types of accounts or any of these strategies that we're talking about, let me know in the comments down below so I can answer your questions and do them on future videos, because if you're asking the question, I'm sure somebody else is too. So go ahead and let me know in the comments down below. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.